We are looking at this question on cost volume profit analysis, which is the CVP. And there it says a company is selling a single product called Wimbo using a rented building. The purchase price per unit is 300 kwacha and the selling price is 1,800 per unit. Rent can be paid in any of the following options. Option 1, pay a fixed rental of 30,000. Option 2, pay a fixed rental of 10,000 and 25% of revenues. And then option 3 is pay 30% of the revenues. So A, calculate the break-even point in sales value using option 1 and 2. How do you calculate break-even point in sales value? Well, this is supposed to be fixed costs divided by the CS ratio. Fixed cost divided by CS ratio, let's remember that. So what will be our fixed cost in this case? So they've given us the particular options. Calculate for option 1 and also for option 2. Please take note of the details so that when I just take you to the next screen, we just calculate directly. And take note that the selling price is 1,800. We will need this figure, and of course the purchase price as well, very important figure as well, so that I can explain in the next screen. So right now we are solving for option 1. I said the formula for break-even point in sales value is fixed cost over CS ratio. Fixed costs, well, according to option 1, we were told that there are 30,000. That is our fixed cost, and that one won't be a problem. Let's go to the CS ratio. What is CS ratio equal to? Contribution over sales. That's what you should know. Contribution over sales, that's your CS ratio. How do you find contribution? Sales minus variable costs. That's how you get it. So what were your selling price? As I said, remember that figure on it minus variable cost, that purchase price per year. The moment you even see certain details with per something, just know that that is a variable cost because it changes per. It's something that is regarding to maybe each year that's going to be changing. And like wow, we're already clearly told that okay, there will be a fixed of so much. So the fact that there was that word pay, the purchase price hence becomes our variable cost. That's how you determine it. And then when you subtract, you get a contribution of 1,500. This contribution, you just get to now divide it over sales. That's the formula for CS ratio. Sales is 1/8. Answer, it was a recurring, it was going on and on. Then after getting your CS ratio, just go and divide 30,000 over your recurring number. Hence, what will be your break-even point in sales value? If you do not round off this recurring decimal, you should just land on 36,000 directly, kwacha. That's the answer. Option 1 in sales value. Option 2, same trick, but there was this instruction. Let me take you back. Option 2, they said pay a fixed rental of 10,000 and 25% of revenues. I hope we're together there. 25% of revenues. So this 25% of revenues has to be found as well, and we'll understand where it's going to go. So we are on option 2. We were told to calculate for option 1 and option 2. So under option 2, what you're going to do is this. Fixed costs, they said 10,000, and of course there will be now other costs, which is 25% of revenues. So the fact that they've stated fixed cost will be so much, that is your fixed cost value. There is no doubt about that, meaning that other 25% that has to be paid is just other costs, which will be categorized as variable. So the moment they've just stated for a fixed cost, don't even think, okay, what about this other cost? The fact that they've highlighted which one is the fixed cost, that will be the one that will be your fixed cost, which is the 10,000. Over what? It's in sales value, so CS ratio once again. So contribution over sales. Find contribution as of option 2. Well, we had the sales, of course. What about the variable costs? Of course, we still have the purchase price of 300. It says that in option 2 you are paying a further cost, which is 25% of your sales, which is going to give you a 450 if you calculate. So you do this. So since it's another cost, we'll categorize it as variable. Since if it's not fixed, then what cost could it be? Variable. That's all. Hence, what answer do we get? 1050 as your contribution. Take note, just sales minus variable cost over sales. We're on CS ratio, by the way. We're just calculating CS ratio as of option 2. Here it gives us another recurring number, something like that, as the CS ratio. Hence, we take it back to the formula, 10,000 fixed cost over CS ratio. You should get an answer of 17,142.86 kwacha. That's all. You're done. Part A is answered. Okay, the next section is asking for what is the degree of operating leverage under each of the three options, assuming a target sales level of 40 units. So, okay, our video mostly is on CVP analysis, but what I can just show you here is okay, degree of operating leverage. Since it's in the question, I can just guide you. Otherwise, our focus mostly is on CVP in this video. So let me just at least guide you with the formula and of course how you work around it. So degree of operating leverage, the formula is sales minus variable costs. By the way, these figures you're seeing here are per unit prices, and then over sales minus variable costs. Same story, they are per unit prices but minus fixed costs. This is how you find degree of operating leverage. So as I said earlier on, this is a video focusing on CVP, so that we've made a question on another topic, but I'm just like guiding you so that you don't get, of course, lost just in case you might want to attempt it. So let's move on to the other part, which is continuing on CVP. The other part, they are continuous with CVP. In addition to the Wimbo, the company plans to sell another product, Kimbo, at 80 kwacha each. The purchase price of Kimbo is 40 kwacha. Assuming a 60:40 ratio of Wimbo to Kimbo, what will be the break-even point in units for each of the products under option 1 and option 2? Break-even point in units. Yes, the formula is fixed costs over contribution per unit. Now the question is, are you dealing with a single product or are you dealing with more than one multi-product scenario? So the trick is this: if you're given more than one product in a particular paragraph or maybe a question, just know that it's multi-product scenario. And how do you calculate break-even point like in units for multi-products? So I'll show you on the next screen. Just take note of all these figures they've mentioned in C. They'll be very key because you're going to be solving them simultaneously for the two products, and then you get the break-even point. So put here Kimbo, here you can put Wimbo, the two products. This is how you solve multi-product. The first step is, you need a contribution per unit when you have been asked for break-even point in units. So that's why I'm showing you this. First, find the contribution for each product. So contribution is sales minus variable cost. Okay, so sales variable equal to contribution. So sales for Kimbo, they told us 80. Variable cost 40. Therefore, the contribution is 40 for Kimbo. As of this one is just fixed on all the options according to this particular Kimbo there, it's held constant. And then Wimbo in option 1, if you remember, if you rewind the video, we still first of all had the sales of 18, but as of option 1 we only had a variable cost of 300, which was the purchase price per. Yeah, so there you subtract. This is the contribution for Wimbo and Kimbo as of option 1, because we also have to do it for option 2. But what next after finding contribution? This is a multi-product scenario. Yes, we need contribution per unit in the denominator, but what's the key of this, or how do you do this? Well, the formula in multi-product says that yes, you're looking for contribution per unit, but look for the weighted contribution per unit. How do you get the weighted contribution per unit? Use the ratios to find the weighted contribution per unit. If not given, this is another approach, but most of the time, if you're given, this is the approach you take. Use the ratios. The ratios, they told us that Wimbo has 60 and of course Kimbo it will be 40 respectively. So it's a 60:40 ratio, meaning what do? just do this. How do you use ratios? The total is 100, so just say 60 over 100. Okay, that's for Wimbo times the contribution for Wimbo, because you're relating to the particular product. Don't multiply this ratio for Wimbo to Kimbo, that won't make sense. Then add it to the ratio for Kimbo now, 40 over 100 times the contribution for Kimbo. Therefore, what answer do you get? Here, it will give you 916 as the total weighted contribution per unit as of option 1. Hence, you can now go and solve the break-even point in units as they have asked, which is equal to fixed costs over weighted contribution per unit. Fixed cost as of option 1 was 30,000. Weighted contribution 916. Therefore, what is our answer? We'll get 32.75 units. Now, these are units. Units we usually round off to the nearest whole number, because you cannot say we have 3 point what units. You just round off the nearest whole number, which is 33 units. As of option 1, break-even point in units in a multi-product scenario. And they even had told us that how much of each product will you produce. So we have to get to calculate that as well. How much of each product will you produce? So I'll show you that very soon. So if anything, they said what would be the break-even point in units for each product. So what you can do is that since it was like a multi-product scenario, you've done the weighted contribution for all the products, and that's giving the break-even point in units for all the products. So this answer we found is for all the products. Now this is not the individual. So how do you get back the individual now? You have the 33 units and you have those ratios for relating to each product. So this is where now you get to use the ratios again to see now how much of each unit you are going to distribute. So like in this case, Wimbo at 60%, 60 to 40, so 60 over 100. By this figure, you know what will be the break-even point for Wimbo. The other side, do the same thing. You are multiplying the same 33, which was for everything, but to know the proportion that Kimbo as well will just have on its own, you also do that. So Kimbo this side, Wimbo this side, then you find the answers. So here I'm getting 19.8 units, but as we said, units we round off to the nearest whole number, so I'll just say 20 units for Wimbo. That's a break even. What about for Kimbo? When you do this side, here again you should get something like 13.2, but rounding off the nearest whole number again to just see there are the break-even points for each product. Let's go to the next part. We do the same thing, option 2 now, break-even point as well for each of the products. What you can do here is that the same story, find the weighted contribution per unit for the two products, Wimbo and Kimbo, as of option 2. So for Wimbo, of course, the selling price is the same, but in option 2, the variable cost increases because of that extra 25% they have to pay, which will amount to total variable cost of 750, because you're adding the 300, sorry, from purchase price plus the 25%, which is 450 from multiplying that on sales. Yeah, and then you get 1050. What about Kimbo? Kimbo is remaining constant. We're told that, so contribution is 40 still for Kimbo. Use the proportions again. There is 60% for Wimbo, okay, or 60 over 100 if you want, and 40 for Kimbo there. What answers are we getting for the weighted? And by the way, adding the answers you get here, we will land with 646 as the weighted contribution per unit. Hence, we just got the formula. What's the fixed cost as option 2? It's 10,000. What about the weighted? We found 646. Answer 15.48, which is like 15.5 if you want, but nearest whole number will just be the best is 16 when you round off this number. Hence, find again the break-even for each product. Just multiply them by each proportion. So let me do this on a clearer screen. Wimbo and Kimbo. So you have 16. Wimbo has the ratio of that. Kimbo 16, 40 over 100. There you get 10. It was 9 point something, but rounded off. Nearest whole number 10. Here this side, it's just going to be 6 when you round off. Hence, those are the break-even point for each product in the two options, and that's how you handle break-even point analysis, just like that.